What's going on, everyone? My name's Obi and welcome back to Courtside Financial. If you're new to the channel, make sure you hit that subscribe button so you don't miss out on any videos, and also make sure you hit that like button because it really does go a long way in helping out the channel. So last week, my guy Robert had a good idea for a video, and I planned on putting this video out last week, but I couldn't quite get around to it. So today we're going to get around to it and we're going to talk about it. Hey, I got a subject you may want to look into on your channel. Seeing that we are all getting stupid rich off of Neo, maybe you can do a video on what is capital gains and how much taxes do you have to pay and what using places like Robinhood do to your investments. This might be a great subject for all the newbies, including Robert himself. So yes, we're all happy that we've had a good amount of gains. Now, personally, I am not selling my stocks anytime soon. I mean, there are certain stocks that I'm selling, and there's certain moves that I've been making. For example, last week I did a short on the market and I made about 70% there. So I'm going to have to pay capital gains tax on that. So we're going to talk about capital gains taxes. There's pretty much two umbrellas that you can fall under. One is long-term capital gains tax and two is short-term capital gains tax. Now keep in mind that I'm making this video in September 2020. Things can change as far as the rates are concerned, and maybe we'll go ahead and do an updated video if things do change in the future. So what is long-term capital gains tax? That's when you hold an asset for over 12 months or a year and then you sell it. So now that means that you've realized gains or you've realized profits. So if long-term capital gains tax is anything 12 months or over, then by definition, short-term capital gains tax is under 12 months. Now keep in mind that both of these don't just apply to stocks, they apply to any asset that you sold to increase your capital. Okay, so it could be real estate, it could be cryptocurrency, it could be a business, whatever the case may be. So this is definitely something to give some consideration before you liquidate an asset, because it can really impact the return that you're getting on the sale of that asset. So you definitely want to make sure that it makes sense. So this is not a regular income job or anything. Your brokerage does not take taxes out of your gains. So it's your responsibility to make sure that the IRS gets their money. And trust me, you don't want to mess around with the IRS. Usually by February 15th, you will receive a form called your 1099-B. I believe the B stands for brokerage. I'm not sure. But you will receive that form. What you want to do is you want to hand that over to your certified public accountant or your tax preparer or whatever software that you might be using to prepare your tax returns. There's a lot of ways to do your taxes yourself these days. The industry's kind of changed. You know, I'm not going to really throw out any company names or anything like that, but you guys understand. So let's go back to long-term capital gains tax now that I feel like I've made that a little clear. Long-term capital gains tax, we said, is anything 12 months or over. If you fall under that umbrella, you are rewarded. You're going to pay less in taxes. That's why for the most part, I am a long-term investor. To me personally, it just makes the most sense. So we're looking at the income brackets, and for my specific case, I fall under the umbrella of $40,000 to $441,000 in annual income. So that means that I will be paying 15% capital gains tax on my gains. Now, like we said, for short-term capital gains tax, you're going to pay a lot more. Now, in this case, we're still looking at the income bracket, and I said I fall into the $40,000 to $441,000 annual income. So that means I'm going to pay 22% capital gains tax. Do you see how the time frame in which you decide to sell something can really affect the amount you pay in taxes? Let's say over the course of some years, I made $10,000 in capital gains. That means I would be paying a 15% long-term capital gains tax. Now, what's 15% of $10,000? That's $1,500. Now, let's say I made the same $10,000 in under 1 year. So this time I would be paying the short-term capital gains tax, which would be 22% in my case. So what's 22% of 10,000? 22% is 2,200. Now, let's look at the difference. For long term, I'm paying $1,500 in taxes. For short term, I'm paying $2,200 in taxes. And if you look at the comparison, the $2,200 is about a 46% increase from the $1,500, even though I've paid 22% on my $10,000. Obviously, the more you make, the more long-term capital gains can help you save. And not to mention that if you're in a good company and you're in the market longer, then your gains are probably going to be higher anyway. I personally don't want taxes eating too much of my gains. So if it's a really significant investment that I'm making, then I typically just go long. Now, obviously, get in touch with a CPA or tax professional. This is just my way of thinking about it personally, but a CPA can really help you out. Because I have a business, my CPA helps me take advantage of write-offs to reduce my tax liability. And for pretty much anyone who's involved in investing, if you ever do sell at a loss, your loss is actually also a deduction. So you want to make sure that you're getting in touch with your CPA or your tax professional so that they can help you calculate that into how much taxes that you should be paying. Now, obviously, there's something called a wash sale. I didn't want to get too into depth in this video, but pretty much a wash sale is when you sell at a loss and then you buy back into the same security within a 30-day period. Then that is no longer allowed to be a deduction. This video could be extremely long if we wanted it to be, but these are just the basics, and I really do hope that this video helped you guys understand a little bit more about taxes when it comes to the stock market or any asset for that matter. So make sure you hit the like button, make sure you hit the subscribe button, and leave me a comment down below. As always, thanks for watching.